Hey guys, this is another look at ZB starting on the weekly log scale charts. I think the theme of this video is going to be trading lows to lows extensions to 618 targets, which we'll see on the weekly chart, the hourly chart, and even the tick chart, and how this target down here has potential to be a major inflection point. 30-year yield is it blew right through this 236 target, and the question is whether it's going to stop and get rejected for now at its 41-year channel right here. Are we going to go right through this on the first time, or are we going to get rejected and then have some retracement on yield, which would set us up for a counter trend rally on price? And again, I'm viewing this as 5 waves down. This first move here was 3 waves, which I think confounded a lot of people. But I think it's a 1 2 1 2. That'd be so a 1 2 1 2 3 4 3 4, and then this is a 5th wave rocketing from one side of the channel to the other. And this is what ZB does in channels. It stacks up touches of wave 2s and 4s on one side, and it punches out on wave 3s and 5s on the other. And so I think this 5th wave down here may have just completed its 3rd wave. So we'll have a 4th wave and then another 5th wave that could touch this 618 target and again touch the bottom of this purple channel. So we're getting close to a possible real inflection point right here. And on the 2-hour chart, again, I don't do fundamental analysis, but I just read this post by Tom McClellan correlating the price of gold with 30-year yield. It's pretty interesting. And he actually puts a date on the top in yield as April 21st, which I think is a little too precise, but we're on the same page that we're getting close. This is worth having a look at. But on the 2-hour chart, this is the 5th wave coming down here. And the way I'm viewing this structure is not as a 1 2 3 4 5, because if this is a 1 3 and 5, these channels, wave 3 can't be the shortest, and it is. So what I think is happening here is that's a 1 down, a 2 up, a 1 of 3, 2 of 3, 3 of 3. This blue channel certainly felt like the unrelenting selling of a 3rd wave, and we had this zigzag that broke out of the channel. Right? So if this is a 1 of 3, 2 of 3, 3 of 3, this could be a 4th wave correction that front ran, coming off the bottom of wave 1. It front ran that lows to lows extension by 3 ticks, and this could be a complete 5-wave move down, a 5th wave, wave 5 of 3, right? So 1 of 3, 2 of 3, 3 of 3, 4 of 3, and 5 of 3. The other possibility that we have to watch out for is that this was a 3-wave move up, this was a 3-wave move down, and so it will be a 3-3-5 flat correction. So we could have 5 waves up to the top of this wave 3 channel here, and there's a little confluence of resistance here, the top of a channel and that lows to lows extension. So maybe it front ran it and didn't trade it, and now we're going to come back and trade it and then make yet another marginal low right here and punch the bottom of the purple channel for a 3rd time on the 2-hour time frame. So we won't know whether this was all of wave 4 or whether it's ongoing until we break out of this channel and break that lows to lows extension. But for now, I'm going to assume this is the bottom of wave 3. If it is, That means that the logical resistance zone for a larger wave 4 of this entire move is coming off the bottom of this wave 1 up here at this degree of trend. And so, I think this low is at 151.06, but there's another low right here at 152.7. So that's a difference of what is that, 9 ticks? Because I think there's a little expanded flat correction in here for wave 2. But I'm going to be conservative. I'm just going to draw it off of this low to low, which means that if we're ready for a wave 4 at this whole fifth wave, then that resistance comes in at around high 145 to high 146. So we could have a 4 or 5 point counter rally here. But to get there, we'll first have to break this more aggressive extension to confirm that this wave 4 and 5 are complete, and break out of this wave 3 channel right here, this broader, darker channel right here. That would be a sign that we're trading a wave 4, and then we could have a wave 5 down. So again, talking about lows to lows extensions trading to 618 targets. If we go to the hourly chart, just looking at this wave 3 in isolation. My trading has improved tremendously since I adopted these, I call them time frame grids, where you're looking at all of the time frames simultaneously instead of switching back and forth between them. And so you can see, channels within channels within channels within channels. You can see where we are on the weekly log chart. You can see where we are on the daily chart, and the hourly chart is probably the most important short-term trading chart. And so just looking at this move in isolation here, this blue channel is the wave 3 of 3 down, I think. And it started off as this bear nest of ones and twos, right? It went 1 2 1 2 1 2, ratcheting down into place, and then I think it went 3 4 3 4 3 4, and then this whole thing was a fifth wave that sort of took the form of like a falling wedge, right like that. And so what this looks like fib-wise is there was this original measured move up here that again ratcheted down, and when it finally held, the move went. And if this is the bottom of this first wave 1, this move down here traded as a lows to lows extension. Right, we see in third waves, ZB trades 38-2 lines of lows to lows extensions, which is about the most aggressive setup. So that means this is a wave 1 up here, and this is a wave 4 at the same degree of trend, which means that down here is probably just a big wave 5. And so this wave 5 developed. There was this first measured move that traded a 38-2 resistance, and it went to and through its targets. And so we developed extensions off of this low right here. So if I can zoom in on that, yeah, so there was this first measured move for this fifth wave that traded the 38-2 resistance, and then this became the anchor for extensions, and it traded once to a 618 target, and then it traded twice to a 618 target. And the 618 target of this lows to lows extension was the end of the move. And And so we're going to see that again on the tick chart. And it's what we see developing on the weekly chart. The 618 target of the lows to lows extension potentially being the end of the move. We've got less than a point away this week. So, what we see on the tick chart right here is, this move on the tick chart is simply this potential fifth wave right here, wave 5 of 3. And it looks like a 1, 2, and then a 1, 2, 3, 4. This little 4 was a lows to lows extension off of this 1, so that's a 1 to 4 relationship. And then a 5. And then we see the exact same pattern. There's a ABC fourth wave that trades a lows to lows extension, the 38.2, to the 618 target, to the tick. It traded the 38.2 resistance to the tick, and the move has stopped so far at the 618. So again, this looks like a 1, 2, 1, 2, 3, 4, 5, 4, 5. So a 1, 2, 3, 4, 5. There's another way to read this. This move can potentially be complete right now. The other way to read this would be this is a 1, 2, 1, 2, 3, 4, 3, 4, and we need to trade the extension one more time. So to confirm that this was an intermediate bottom, we need to break this lows to lows extension right here. But again, we've seen it on the tick chart, moves ending at the 618 of the lows to lows extension, and we've seen it on the hourly chart. And so this, I'm convinced, is the level to be aware of on the weekly chart. We've completed potentially wave 3 of 5 down. So if we print a couple of more weekly candles down here in a choppy fourth wave mess, we could make another marginal low right here where the channel meets the 618 target around 140. That has potential to be a major inflection point. And so again, this fifth wave, if it's complete, would not run to its target. It has a valid target down at, call it 140 down here. It would stop and reverse. And again, first we need to break this lows to lows extension to confirm that this fourth and fifth waves are complete. And then we would need to trade this larger extension up here. So we could run 5 points up to 146 more or less, and then come back down to the bottom of the long-term purple channel again. Oops, I didn't mean to do that. Which would be around 140, depending on when we get there. I hope that's clear. Is that everything I wanted to say? I think so. I am still long-term bearish on bonds. I'm not sure we're going to get there in a straight line like this. And so again, if we have a retracement on yield, we're sort of setting up, we are so extended on price, we are setting up for a counter trend rally. And the target for an ABC correction would be somewhere back. Typically you come back to the neighborhood of the fourth wave at the previous degree of trend, which lines up between a 38.2 and a 50% retracement. So call it 160 to 165. That's all I have time for. Thanks, guys.